FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's 8/8/17. Well, we keep watching the gold price, silver price gyrate. It looks like it's going to break out, and then it stops dead in its tracks. And if you're as confused as I am, then you definitely want to hear from the person you're about to hear from, our next guest. And his name is Jeff Clark. We've known him for years, been on the show a number of times. Jeff's latest position is Senior Precious Metals Analyst at goldsilver.com. You might not be familiar with goldsilver.com, one of the more reputable bullion dealers and precious metal dealers out there. And that's why Jeff is with us again. Oh, by the way, any questions, comments, email us at kl@kerrylutz.com. Jeff, welcome back to the show.
Kerry, it's great to be back talking with you again. It's been a while.
Been a while. Things happen in life, changes, and hey, now you're at Gold Silver, and you're actually doing exactly what you want to be doing, right?
Yeah, that's a good way to put it. Yes, it is. I get to write about gold and silver all day long, so I'm loving it. I'm working with Mike Maloney. He's kind of the founder of goldsilver.com. And then one of the old cohorts there, Alex Daly of Casey Research that I used to work with, he is the CEO now. So it's all one big happy family over there, and we're loving it. I'm really enjoying it.
Yeah, well, I know Mike for years already. We've been on the show before, and a guy who's really on top of things. And it's great that you and Alex are part of his team. I can only wish you good things for that. And I guess the future all depends on precious metals prices, doesn't it?
Well, certainly my retirement depends on the future of precious metals prices, because I am heavily invested in this sector. I mean, I'm comfortable with that because I work in the industry, but I really do think that this is a time to be metals. There are times in history where, it's okay to be underweight them or have an average weighting of them. You look around at the conditions we have today in the economy and monetarily and things like that, and this is clearly a time to be overweight precious metals. So that's exactly what I'm doing. And even though prices have been lethargic, I think this is the time to be accumulating, because I just don't think the situation we have today is going to last forever.
Yeah, it's it just reminds me of something Eisenhower said. He was good with the little turn of a phrase, accidental turn of a phrase, and he said things are more like they are today than they've ever been before.
That's very true. We've been through this before in history with this kind of setup, in the economy, with debt, especially with monetary expansion and printing of money, and a lack of real political solutions. And that's not a comment on our current president. It's just a comment on our political system today. So, you look at all that and, add up all the risks that are elevated just literally across the board. And it really doesn't take a lot to come to the conclusion that, okay, I need to lighten up on stocks and bonds, and I need to go overweight precious metals. And that's exactly what I've done.
Okay. And I think it's important to look at your background, Jeff, because you're not just anybody saying this. Obviously, you've been involved in precious metals mining for a long, long time. I mean, you worked in the business with your family in Nevada, California, Arizona, right?
That's right. Yeah, my family has owned mining claims in all of those states, and it was more of a hobby for him, but it was a serious hobby. He got very involved and started buying up claims, sometimes alone, sometimes with other investors, sometimes with a big consortium of investors, and they would go out and literally prospect and try to find, gold. So this was not going to be mechanized mining so much,
right?
But more prospecting and that sort of thing. So yeah, I've been around it for a while, and always enjoy getting outdoors, but it's kind of like fishing. When you go out, you never know if you're going to catch something. You could catch something in the first 5 minutes. You could take all day and get nothing. And gold panning and gold prospecting is the same way. You never know what you're going to find, how much, if you're going to find it, when, and all that sort of thing. So you have to have the patience to be able to go out and do that.
Right. And looking at things now, so like you said, we got this government instability, the inability of the political process to come to terms with very deep, profound economic issues that really have the potential to radically alter the way we do everything, literally. And that uncertainty, I think every person on the planet maybe kind of feels something is off, something is going on here, and you don't know what to do about it.
Yes, very good. The best way for me to address it is tell you a quick story. I was talking with an institutional trader with a large company back east in New York City. And the trader was telling me, this was earlier this year, that he was seeing a shift among institutional investors and traders into gold, that there was this renewed interest in gold. And I thought, wow, that's very interesting, because if the institutional world starts buying again, I mean, they represent market moving wealth, right? And of course, if they are buying again, what is it that they see? And, they see the same things that you and I see. They look around and see, okay, it's really time for a hedge because the stock market is at all-time highs. The bond market is at all-time highs, or yields are at all-time lows. The average home price now is back above its 2006 bubble. The U.S. dollar was in a 6-year uptrend, and that's reversing. Interest rates are starting to go back up again. The CPI, the inflation measure, is at near all-time lows, and this is the third longest economic expansion since 1785,
Wow.
The time between recessions. So, they're all looking around at this. And by the way, it's also the second longest bull market in stocks, in equities, for the past couple hundred years. So, institutional investors are looking around at all this and thinking, wow, all of this is coming together at one time here. There's a lot of elevated risks out there. How can we hedge this? They may not sell all their positions, but they definitely want to hedge it. How are they going to hedge it? And they are hedging with gold. And I can't tell you that, all institutional investors are back into gold now. That's not true. But there is a renewed interest in gold because of the very things that you and I can look around and see are all in jeopardy. So it's not hard to just look around and determine that, hey, I need to have a hedge for myself as well. And of course, gold and silver are one of mankind's best hedges for any type of crisis. So there you go. So I think it's only a matter of time before there is not just a significant inflow into gold, but a rising price environment as well.
Yeah. And a lot of you out there, I mean, the gold ownership now, Jeff, is so minuscule as a percentage of society that if many of you out there thought, I want to buy some gold tomorrow, you wouldn't know how to do it.
Yes, I think that's true. Some people, many people, most people don't know what to buy, where to go to buy it, and that sort of thing. So I think Mike Maloney has the right idea with his name, goldsilver.com. But you're right. The percentage of ownership in gold and silver, we know, is very small. We don't know the exact amount, and we never really will, because most people are tight-lipped about gold, and rightly so. But we know it's anywhere from maybe 1% to 3%. It's not even 5%, even with some renewed interest in gold and that sort of thing. So we know it's small, whether it's compared to the total number of financial assets that are out there, or compared to the amount of physical demand versus the population. And no matter how you measure it, it's small. So once the general public really gets its teeth into gold and silver, and I do believe believe they'll be pushed into it. They'll be forced into it because of the type of crises that are coming from, all the risks that are out there right now. Once the public gets their teeth into it, I mean, it really is going to be like my old boss, Doug Casey, used to say, trying to push Niagara Falls through a garden hose. It's really going to be some of the biggest bubbles in history where gold and silver. And that's, I think that's bound to repeat.
Yeah, there seems to be a certain kind of inevitability about it, right?
I think so. I don't know where it's going to come from. That's the thing. A lot of people think, well, it'll be when the stock market reverses. And yes, there's a inverse correlation between gold and the stock market. So if the stock market goes into a bear market, gold is likely to do well. History bears that out. But there's so many risks out there right now. And it always seems to be a black swan. It just doesn't it? It just comes out of nowhere. It's something sure people aren't really looking at or looking for, and that's what sends the economy or whatever into a tailspin. I think it is likely to be something monetary, though, with our currency, with the debt, with deficits, with the money printing that's been going on, maybe another bank failure, maybe something over in Europe. But really, I'm just guessing, and everybody's really guessing. We don't really know, but that's why you own gold. That's why you own physical gold and silver, is you're prepared for whatever that scenario may be. I mean, think about it. What other asset out there could you own that can protect you and your finances against all comers, and any kind of, fear-based or negative outcome out there. Wow, there's not many things that can protect you against all scenarios except gold and silver.
Yeah, exactly. Exactly. The ultimate insurance policy. And there's so many ways to buy it. I mean, you should hold some physical bullion, right? But there's other ways as well.
There are a lot of ways. That's the nice thing about the gold market maturing in this modern day era, is that there are lots of options. Prior to 2005, there wasn't even a gold ETF you could buy. And now look at all the options you have with gold ETFs. So I personally don't own a gold ETF. I'm really more about physical. Gold is your crisis hedge, your ultimate insurance policy. Like you said, it's a tangible store of value. So I like to keep it that way. And if you have a piece of paper, all you really have is exposure to the price. There are scenarios which exposure to the price won't be enough, where you actually need to hold the actual physical metal. And so when I say I'm overweight gold and silver, I mean I am overweight physical gold and silver, because I'm trying to protect against as many negative scenarios or ramifications out there as possible. So that's why I own physical.
Yeah, which makes complete sense. And, you got to have some physical, you got to hide at will, wherever it might be. You can get into storage options another time, but really, there's no substitute for it. And that's what you guys are all about at goldsilver.com.
Absolutely. Yeah. 90% of our constituency does take delivery. We're trying to change that a little bit and encourage people to, consider putting some of their physical holdings into a private non-bank vault. So we do have a new allocated storage program that just came out. It's very exciting. But either way, you do want to hold physical because, like I said, there are scenarios under which just having price exposure really won't be enough. So you just look around the world as we've been talking, Kerry, and there's just so many risks that I just feel so much better, especially when I go to bed at night. Like, okay, I've got a tangible store of wealth that can protect me against lots of different things. And that makes me feel a lot better than, just buying more Apple stock or whatever the case may be. That's not a knock on Apple. I'm just saying, I'd rather own more tangible right now than intangible.
Yeah. Yep. Exactly. Couldn't agree more with you on that topic, because this world it's madness personified. And when you think you've heard everything, Jeff, you find out that you haven't, that you you never even dreamed of what's possible. I mean, look, 20 years ago, would you ever believe that we could live in a world where quantitative easing would become the norm, and it's supposedly sound economic policy for all the ills that economic ills facing humanity? Did you ever believe that was possible?
10 years ago, that wasn't even a word. So that's a man-made creation to solve a man-made problem.
Yeah.
What's wrong with that scenario there? So, I feel a lot better about owning mankind's oldest form of money than I do believing in some political promise or government promise.
Yeah, same here. There's just, like you said, there's so many black swans out there. So if we want to find out more about you, more about goldsilver.com, what should we do?
It's pretty easy. Goldsilver.com. That's where it's at. And then you'll see lots of tabs there. And under Knowledge Center, you'll see the blog, which is what I write. Lots of good articles there. And by the way, an interesting one coming out, I think we're going to publish today about the gold-silver ratio. So there's some compelling data there that really points to why you might want to favor a little more silver right now than gold. So you could look for that article on our site too.
Yeah, the ratio's over 75-1 right now. Memory serves me correct?
Yep. And in the past 20 years, something like that, every time it's hit 80, it's had a major reversal. And it did hit 80 and has had a reversal. And now it's kind of bumping a little bit, coming back up and going sideways a little bit. And that's what it's done every time in the past. And then it falls again. And so if it were to fall again now, that of course would imply that, silver is going to outperform gold going forward. So there's some interesting research there. I'll let your audience take a look at that if they'd like, but it's very compelling.
Oh, well, hey, we appreciate that. Definitely want to take a look at it. And agreed, the ratio is totally out of whack, especially when you look in nature, anywhere from 1 ounce of gold to 11 to 15 ounces of silver. And historically, the ratio for currency purposes, going back to the beginning of the Republic here, was 11-1. It got adjusted periodically. And then when it was demonetized, that was when all sense of perspective was lost on it, I think.
Yeah, good point. In the modern day area, the lowest it ever got was 17-1 at its peak back in 1980. So, after both metals were free trading, if you will. But even there, if that's all it ever got back to, from 75-1 to 17-1, that's some pretty serious outperformance on the part of silver. So.
Yeah. So that's something we might have to look forward to at some point in the future, the normalization of that ratio, which has been a long time in coming. And, the strangest thing, Jeff, is that while the ratio has been going up, the uses for silver, its application in industry, medicine, you name it, solar panels, wound healing, so many things keep expanding dramatically, and yet the relative price to gold keeps going down. It just something makes no sense there.
Right. The industrial demand for silver has really exploded. So it's a good thing that supply has been able to keep up. But that's another issue. There was a point where there was a new use for silver being discovered almost every day. And obviously that can't continue. I don't know if that's necessarily true at this moment in time, but there's still lots and lots of industrial uses for silver that are still being not only used but discovered. And yet supply is peaking. New mine supply is peaking. So that's going to go into a reversal and start to decline here for probably the next 5 to 10 years. So there's going to be a potential supply crunch that could be coming right about the same time all these crises start to rear their ugly head. So it could be very interesting.
I almost guarantee you it will all happen at once. Right? I mean, it's just the way life works here. And I heard Keith Neumeier, CEO of First Majestic, talking about this very issue and the way he had to cut production because the price became uneconomical. His all-in costs are, $14, $15 an ounce. And, if it's trading at 16 something, not that big a profit for the risk being taken, managing all those people. They really had to cut back a lot. And he's one of the more efficient, pure producers. And then you've got the fact that it's byproducts from many base metal mines, copper, nickel, zinc. And those markets, up until recently, weren't doing real well. They've been underinvested as well. And I'm inclined to agree with you. At some point, supply is going to become a big issue. And yet another reason to own silver is if you needed any others, right?
Right. A supply crunch is a very real thing going forward. And by the way, that's just as true for gold as it is for silver. The supply crunch there is going to be just as real because new supply coming. There's not a lot of recycling of gold. There is with silver. There isn't with gold.
Yeah, exactly.
So that for both metals, there could be a very real scenario where it's, there's just not enough supply to go around. And of course that, economics 101, supply and demand, that's going to drive the price up all by itself, regardless of what else might be going on. So
totally agree. And hey, it's great having you on again, Jeff. Great reconnecting with you. If you've got any questions for Jeff, myself, kl@kerrylutz.com, email address, Twitter feed @KerryLutz. Feel free to tweet us. And of course, the Facebook page is Financial Survival Network. Jeff, thank you so much for coming on, and we will talk to you again real soon.
Really enjoyed it, Kerry. We'll talk to you again soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.